Perhaps, Avinnash, would you agree that this is, we've all been complaining about valuations, prices running way ahead of valuations, that the earnings picture seems to be, that's being drawn is a bit too optimistic. Now that we are seeing that correction, is this the time to start buying gradually?
No, definitely. If one were to build a long portfolio, at least for the next 12-15 months, I would presume that, the downside now looks pretty, visible in the sense that 7,900 or 7,800. But valuations definitely have come to very attractive levels. If you look at typically, automotive stocks or typically, capital goods stocks, or for that reason, housing finance stocks, I would presume that this is probably a good time to get into quality stocks and build a portfolio with at least a 12 to 15-month horizon. I would not be surprised that the outperformance over the next 12 months could be quite significant, because this demonetization impact is going to be completely, neutralized over the next 2 quarters. Hopefully, the December quarter may not be great for some consumption-related sectors where the cash component is high, but otherwise, from a long-term point of view, I think this is probably the good time to actually tell clients to, start investing slowly and actually, be ready with their cash. I mean, in case there's a further fall, I would be more confident to buy, because overall earnings growth for FY18 should definitely pick up.
NBFCs, we've seen, I know you have, many people are saying that there are some NBFCs that one can buy, and I'm seeing that you have LIC Housing Finance out there. But do you think, we've seen some savage correction in the frontline counters. Do you think that again the correction is overdone, it's a panic that we're seeing, and perhaps now it's worth starting to buy a little bit?
Now again, from the microfinance space or from the NBFC space overall, I think valuations for specific sectors, something like a Bajaj Finance, a Capital First, typically I think you need to take a stock specific view. Yes, I think valuations had definitely run up far ahead of the fundamentals for even FY18, and I think to a large extent, this correction has come in probably for some sort of reason, but it has come at the right time. I would presume that wherever the asset quality is good, the loan book growth is pretty decent. I would not be surprised that maybe if one were to take a long-term call, these companies would still generate a better ROI as compared to the PSU bank. So clearly, I think one has to take a long-term view, and I think not everything, but selective buying can definitely be done.
Like, let's take the